This is a confusing and often downbeat market, but there are some real bright spots, like domestic housing. Ever since long-term interest rates plummeted over the summer, you know what? This industry has really caught fire, powered by cheaper mortgages. Housing starts reaching a 12-year high last month. Now, that's a big deal, people. So it's no wonder the home builders have caught fire. So let's just take a look at Taylor Morrison, which has a presence across Arizona, California, Colorado, Florida, Georgia, Illinois, North Carolina, South Carolina, and Texas. This home builder is one of our favorites, and it's seen its stock rally 62% year to date. And it just got a major boost last week when the company announced it had seen a ludicrously high 30% increase in home orders in July and August, even better than KB Homes, which you know I like, that we'll talk about later. Can these stocks keep climbing? Well, let's take a closer look with Sheryl Palmer. She's the chairman and CEO of Taylor Morrison. Get a better sense of how our company's doing and where it's headed. Ms. Palmer, welcome back to Mad Money. Good to see you.
Again. Thank you.
You are hitting on all cylinders, and a lot of it is unexpected. Unexpected because people felt that with the changes in SALT, that people wouldn't be buying homes. And people also are shocked that there is such a big demand for homes immediately for renting and not just for living. So tell us about these trends, because they are surprising to people.
Well, it's quite a good time, and I understand that there's been a lot of movement with interest rates, but we're really in the largest expansion we've really seen in recorded history, right? And things are looking good, but it's no surprise if you think about household net incomes are growing, people are doing better with their real estate, savings are up, incomes are moving up, people are feeling good, and that confidence is absolutely showing in the real estate market. And that's not even to mention the demographic tailwinds we have with how the millennials are feeling about buying their first or second house, and certainly the boomers.
And you've got a terrific price point for your homes that is good for both starter and for move up, right?
We do. We really serve all consumer groups, and we have focused in strategically on that barbell of those millennials and the boomers. I mean, that represents, 160 million plus folks. It's interesting, Jim, because everyone talks about the millennials like there's this one group of people and they're not buying. We're just not finding that. In fact, we're finding exactly the opposite. They're quite qualified. We actually take the millennials, we split them in half and say there's the older millennials and the younger millennials.
So what would be the cutoff there?
So 30 plus, that's when we're seeing probably 75% of our millennials are buying their second house, the older millennials, and the ones under 35, about 45% of them are buying their second house. The average age of a millennial wanting to buy is at 32, 33. Okay. And that's generally directed through marriage, more important, children. And they're quite excited. They want exactly what they grew up with.
Well, see, that's very different. You know that. We had felt that millennials were a breed apart, that they would always live with their parents, or maybe they'd always rent. It just turns out it got a little delayed, but they are like us.
They absolutely, and they're not running from us.
No one else is saying that except for you.
That's too bad.
All right. And I mean, you have data.
And we spend a lot of time understanding our customers. About a third of our buyers are millennials. And if I look at what that was 5 years ago, that's 20% of our buyers. So we've seen the movement consisting with the aging. And, if we were to chart, Jim, the last 30 years of home ownership, every 2-3 years, we would see that average age of home ownership move up. So it shouldn't be surprising that this largest cohort is doing exactly the same thing.
All right, well, then let me ask you, our coverage, everybody's coverage is filled with gloom, not our coverage. The New York Times is gloomy, and Wall Street Journal got gloom. I listen to you, and not only do I think that gloom is inappropriate, but that maybe we're in kind of a halcyon, really great moment in the home building business. Low rates, costs haven't gone up that much. I know there's labor issues, but you're holding them under control. We finally have a lot of buyers, and there's different kinds of buyers. The buyers that will be renters, so to speak, but all sorts of different price points. This is good.
This is good. The affordability issues are real, market by market, but not as real as I think sometimes the media portrays. And I say that, Jim, because once again, when we look at our consumers, even with our first-time buyers, they can afford a lot more of a house. Part of that is low interest rate. So they could either afford a higher interest rate, somewhere to the tune of 300 to 500 basis points on average, or a much bigger house. So I think the consumer's changing their relationship with home ownership, which is a good thing. And that's why we're seeing increases in their savings. But as you said it, we're just now seeing income growth. Interest rates are our friend. We have no supply. It's a really good time.
Okay, well, this is so many people come on air and they say, listen, low interest rates don't matter. Doesn't matter whether the Fed cuts rates. I look at home equity loans. If the Fed cuts rates, those get better. I know the adjustables. I'm still paying too much for my adjustable. I think it's very clear from your numbers that low interest rates matter tremendously, and that the people who say they don't just haven't talked to you and done the work.
I think, unfortunately, we get locked in on these sound bites, and I think we have to get under the sound bites and let the data talk. If the information tells us, that's what we use. We talk to our customers so many different ways, and it's about building what we know they want.
You know what? The facts are a breath of fresh air.
Well, good.
All right. Thank you so much. Congratulations on great numbers, great quarter, great things that you've done for shareholders. That's Sheryl Palmer. She's the chairman and CEO of Taylor Morrison, one we have liked, I don't know, from the low 20s. Look at this thing go. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.